Hello and welcome to this webinar hosted by BizClick Media Group, publishers of FinTech magazine. My name is Scott Birch and today we are discussing the future of KYC, a digital banking perspective. Now, there are a number of mandatory regulations that obtain the data of a customer's identity to prevent risk in financial transactions. Banks of all sizes must use Know Your Customer, or KYC, processes to ensure that customers, agents, and consultants are who they claim to be. This webinar will take a deep dive into the topic of digital banking and how to successfully leverage KYC processes. As digital transformation is in full force and legacy systems become obsolete, it is essential that the digital banking sector is resilient and prepared to face risk. Now, joining me today is Aravind Narayan. He is Global Director, Sales Strategy and Execution, Customer and Third-Party Risk Solutions at Refinitiv. And he's going to tell us a bit more about Refinitiv in a second. Aravind is a global director in the sales readiness function for customer and third-party risk solutions, with a primary focus on product go-to-market, commercial and sales strategies across Refinitiv's digital identity and customer screening propositions. Aravind joined Refinitiv 2 years ago from Amazon and has more than 14 years of experience in the technology industry, working with various organizations in the US, India, and the UK. Aravind is an evangelist for disruptive technology as a means to solve everyday problems faced by organizations, from onboarding to fraud detection and beyond. He also speaks passionately, as we will find out, about digital banking, payments, and open banking. So welcome to the show, Aravind.
Thank you very much, Scott. It's a pleasure, real pleasure to be here. Thank you.
Well, it's a pleasure to have you. And no, as I said to begin with, and for people who may be unfamiliar with Refinitiv, why don't you just tell us a bit more about the company?
Absolutely. So Refinitiv, I think many of you have heard in the news recently, we got acquired by London Stock Exchange Group. So now we go by Refinitiv and LSEG Business. So you can imagine with that, the size of the company, we really brought in two big forces together and joined and became a big force as a market data provider. So what do? We have several business units. So what I work for is customer and third-party risk solutions, like you said, Scott, in the beginning. So within that frame, basically, we help our customers every day to kind of solve problems, especially when it comes to Know Your Customer, especially by providing data related to screening, digital ID solutions, fraud detection technologies, enhanced due diligence technologies, and from supplier onboarding to third-party risk management solutions. So that's pretty much what we do from a risk base. And there's a lot more that we do from a financial market data solutions as well. But if you want to know more, please go to our website and there's enough information there.
Okay, great. And obviously that's completely aligned with our audience today. And for anybody who is joining us, you can ask questions live as well. So if you go to the chat function at the side of the screen, you should be able to see it on the right-hand side, then you can post your comments and questions in there. We'll try and address those during the show if we can, but if not, then I'm sure that Aravind will get back to you at a later date and answer any specific questions that you might have. So please, do get involved, engage with us, and we'll do our best to react to your comments as well. So on with the webinar now. And as financial services digitalize, what's the biggest challenge, Aravind, you think that they face when it comes to combating financial crime?
Yeah, I mean, I love that question, mainly because every kind of webinar should, or the kind of concept should start with addressing the challenges. So for that, I think that everyone should know what those challenges are. So, and again, if we start talking about those challenges, we could definitely be here all day, but of course we are on a clock. So here we go. So first, let's look at how bad is the fight, right, of combating financial crime. How bad is it? So it is bad, right? So, I mean, I read recently, like, it's as simple as if you put 3 M's, which is man, machine, and money, in a room, there's about 95% chance that there's going to be money laundering happening to conceal that source of funds, right? That's how easy it is for someone to commit a crime, because there's a lot of gains that come out of it. So that puts us in a very difficult fight, right? Now, obviously, fast forward 2020, COVID happened. So everybody is now trying to like, okay, let's go digital and get there. But at the same time, there's another group, the dark web, the fraudsters of the world, the financial criminals. They're also thinking, hold on, you know what? This is great. Let's adapt and work through this. So that's when things like using money mules, especially they call it the Generation COVID money mules, and what they are in need of was money. So what they said is, these fraudsters basically said, hey, you are in a financial system as a legitimate person. You've been verified, you've been KYC'd, all good stuff. What I'm going to do, I'm going to send you money and you need to send to another account. So it goes in, comes in, and no flags are shown because you know what, that's a legitimate person. He or she transfers money, and they've just transferred money from their account to something else, and they get to keep, let's say, 1%, 2%, whatever. So that kind of increased exponentially as part of this COVID. And in the UK alone, I think we saw about 66% of such scams increasing, right?
Wow.
And it's astounding. And on top of that, COVID was, as I said, it was a big catalyst for change. People started moving from physical to digital. Customers basically demanded, all right, you need to give me something so that I don't need to come to your branch anymore, because hey, branches don't exist at least for the good part of 2020, didn't exist, so because they were shut, right, with the lockdowns and everything. So and then banks thought, okay, yeah, we can give you digital. Oh, there you go. Here is your mobile app. But then, that's not it, right? It goes a lot more than just a mobile app, because with the app, obviously, we need to do KYC. Hold on, if somebody was trying to open an account, how do we do KYC? We always invited them to our branches and made them fill 15 different forms and to get themselves on board. But now we can't do that. All right, you know what? Let's cut them some slack. Let's onboard them anyway. We'll deal with KYC later on. So that also caused a lot of problems, right? That is another challenge.
Yeah.
So to move to a digital, and then you need to scale it. You need to improve the customer experience. None of that was thought through by many, because there was no thought process around that at that time. And then there was this data overload that came with it. So, we got digitally a lot of data, a lot more than what we would actually collect, because, it was there. It is a digital mechanism, so you could collect all this data. Now what do we do with that data? I don't know. How do we identify anomalies? How do we share information to regulators if something is wrong? How am I supposed to tame all this data and then bring it to in an understandable type of information that can be actioned upon, right? So then there was like, okay, let's look at some data providers. Okay, screening, adverse media. Adverse media is basically negative news. So many companies thought, how do I do adverse media search? Oh, that's easy. Look at media source. What's the best available media source? Google. Oh, all right, let's Google it and find out about a little more about this customer. But when you think about Googling and finding some information that you're really targeting, it's so hard to find. So if you really know what you're looking for in Google, it's sometimes not easy. But if you want to search like, which was that movie that so-and-so acted, you might actually get that information because you don't know what you're searching for, but Google gives you options. And then you're like, I get it. But if you really know what you're doing, which is what compliance and, all the compliance officers, compliance teams do, right, as part of the KYC, and they won't be able to get it. So this is funny because Google, as much as I love Google search, it's not tailored for something like KYC, right? So that's where you need to look at smarter systems, better solutions that is out there to kind of do this work. So that was another challenge. And I remember someone said, where's the best place to hide a dead body? And that was like, third page of Google. So that's a kind of vast data that we get, and what do we do with it? So it's most of the time is that kind of an issue. And then let's say, okay, you can go digital, you know exactly what data you want. All right, all good. And then do you trust that data source? Like again, upon one of the this sort of roundtables I attended about a couple of years ago, and a credit bureau, a reputable credit bureau, one of the tests that one of the roundtable members did was to ping the credit bureau with a false name and address. Basically, they did Donald Duck, 123 Main Street, United States. And you wouldn't believe, after third ping to that credit bureau, it came back saying, oh yeah, Donald Duck lives in 123 Main Street, it's a match. Because what happened at that stage was we kind of created a synthetic identity to Donald Duck, because credit bureaus, so the point I'm trying to say is, like, it's not, you don't know who to trust, and you believe in certain digital sources, but then how much can you trust, right? How good the technology that credit bureaus, for example, or other data providers have employed to make sure that you are getting back the right results. So this is where the challenges are mainly around. And on top of that, it's a balancing act, as I said. So if what's the goal of compliance or KYC? If the goal of KYC is to stop every customer, or rather, yeah, basically it's like red light for everybody who comes in, and then you have to explain yourself by giving all the documents and everything, and then you get the gate open, you can come through. That's a tricky approach, because it's very difficult to have reduce the drop-off rates of customers, because they would come in, they would be like, oh my god, this takes forever. You know what, I can't be bothered joining this bank X, I'm going to go to bank Y, because there are so many. So the race to the top is pretty much, how can we best use technology to kind of make the customer experience, and at the same time, don't miss out on KYC. You should do your KYC, but also make customers feel like they're not spending forever to upload and download and selfies and smile and laugh and all of that stuff, right? So, I mean, you can imagine. I mean, some say smile, some say blink, some say all sorts. So this is where it becomes a very difficult kind of a story to say what works best for a customer, and that's the kind of challenge. So how do you keep your customer happy? And what's the where do you draw the line where you say, okay, beyond that we can't go ease out on our KYC, because then we are committing a regulatory kind of slack, or unless or we might actually risk losing the customer. So that's the happy medium that we need to find, right?
Yeah, I get that. It's a real, like you say, it's a balancing act, isn't it? It's finding that sweet spot and that tipping point.
Absolutely.
Where when a customer comes to you, they feel confident enough that they are following the proper processes and regulations, but also that you don't ultimately turn that customer away from the business. And so I imagine, I mean, as a bank, that is a huge challenge. And I mean, it's interesting. You outlined some of the challenges they face. And like you said, we could talk about this all day, really, when it comes to it. But it just highlights actually that the rapid move to digital that was caused by the pandemic was in many ways an absolute gift to those looking to take advantage of it from a criminal point of view.
Absolutely.
Yeah.
No, I just want to touch on one more thing here. So we Refinitiv recently launched a report on called Global Risk and Compliance Report. It'll definitely be available in your resources to download. So this is a great paper, right? I mean, I kind of read through it recently, and we interviewed about 3,000 mid to senior level staff working in the financial services. And I'm just going to throw some numbers out there, right? I mean, about 65% mentioned they were taking shortcuts when it comes to KYC during pandemic. However, it's changing because now that market is now stabilizing, we can't say COVID as a reason anymore for something that's happening or not happening. So at least 54% agrees that it has had an impact on how they looked at technology that helps with KYC verifications and checks and all that. So because everybody's concerned about financial crime, because at the end of the day, you get caught, it affects your reputation, it affects your investor confidence and client relationships. So you want money, you want investors to invest in your company, get on with it. I mean, that's the bottom line. So yeah, I mean, it's an interesting read.
Okay, well, look, I'll make sure I take a read of that, and as you said, I'm sure we can share that in our resources link that we have on the webinar here as well. So the question is, I mean, and obviously we've teed this up quite nicely, but with this ever increasing fin crime and fraud backdrop, how can data and technology actually help to fight this? So yeah, what can data and technology do?
Yeah, again, very nicely moving on to the next one. So that's great. So this move to digital is, again, as I said, touched on earlier, it's not as easy as you think, right? I mean, this is where technologies and tools can definitely play a role. So I think we are moving from a high friction, high touch environment to a low friction, low latency environment. So that's the kind of the path that we are going, right? Because paper-based, go to the branch, talk to the customer care lady for half an hour, fill a million forms to, oh, I'll do it all online sitting at my desk, right? I mean, that's the kind of trajectory they're moving. I mean, again, has it happened yet? No. I mean, I applied, I went through the mortgage workflow about a year and a half ago. And honestly, the amount of documents I submitted, and I'm thinking, hold on, I submitted all of this about a year ago to you guys in this department. Why is this team not talking to them? Right? That was an obvious question. Not everybody thinks that way, but I'm just because I'm in this, I could kind of see. So it's a long way away. I mean, it's not a long way away, but it has to happen. It has to change. So that's where, especially the fintechs are really making a dent, right? And getting in there, solving the customer problem. And that's lovely, right? I mean, that's why I love this. And yeah, so how can you solve this, right? So first of all, you need to understand the various stages of KYC process. So digitizing one part will not solve your problem because, oh, I collected all the data digitally, and now what? Oh, now analysts have to go through and sit and review all this. No, that's not going to work. I mean, you're still not bringing in efficiency. You're not embedding KYC into your workflow. And why is that important? Because KYC for me, it's so important purely because it's the first impression that a customer makes of your company or your bank or whatever, fintech, for example, because that's a front door. You come in, you want to join, you have a set of processes, you have a set of documents to submit, you have a set of selfies to take, for example. So all of that is a first impression. So you need to be spot on with that, right? I mean, that's the main thing. So as I said, digitizing is not going to solve, one part is not going to solve the entire flow. So you should be able to embed compliance in every process of the step and do that without, again, introducing too much customer friction. You need to understand the happy medium. So again, what is too much, right? The cliche answer would be like, oh yeah, it depends. It depends on what? Like, how would you understand what's an acceptable onboarding journey for a customer? So I was looking at one of the, it's about 2 years old, but the data still, I like it because from 2 years ago, the average frustration threshold for a UK customer, for example, to drop off was about 14 minutes. So they would wait for 14 minutes in an online journey before they actually decide to drop off. that's quite 2 years ago. So this is pre-pandemic number. So it's a big number, right? So I mean, and it's a big target for these banks and others to meet. Now, looking at KYC, what is out there, right? So there's screening. So what do you screen against? Like, there's sanctions and PEP, and on the rest. PEP is politically exposed persons. I'll explain a little more about that in a bit.
Yeah.
And then there is verification, validation of these documents. Then there is liveness detection to see if you are really you. If the fraudster is assuming your identity, they stole your driver's license and want to be you. Can they do it? No, because at some point they get caught because their face is not matching the photo in the ID and things like that. So, and all of this at the end of the day will go into let's say a risk scoring engine or something, and it constantly works, right? And then see if there's any sort of red flags. So post onboarding, you obviously want to kind of monitor your customers, you want to monitor their transactions, and you want to keep screening them to see if they ever appear in a blacklist or a watch list that you don't want to be associated with. So the bottom line should be all this data. So there's, as I mentioned, there's various stages. So all of this data ideally should sit in a single customer universe. And that's super important, because if you have all the data coming into a single customer universe, and if I say Aravind, you just have to pull up my name and everything about me, right? My transactions, how did I get into the system, and what do I do, all of that. So that's how you define a customer universe, and say, okay, now it's easy for me to understand if there are any anomalies that exist. Then I'll be able to figure out what's wrong or what's right.
Yeah.
Another point is, like, let's spin it back, right? So we look at it from a customer perspective. I mean, I'd love to just open my bank account sitting at home and just start transacting. I mean, that also for me is a great opportunity, rather than going all the way to a bank to get something done. I mean, that's, from a customer perspective, is beautiful, because that's, for me, is a happy customer, and they're like, the more you offer me, I'm going to be staying in your world forever, because you're giving me options to apply for a loan, you're giving me options to apply for a mortgage, you're giving me ways to save my money, you're stopping me from gambling. So there are various methods that would add value to a customer journey. So that's the best part. Again, understanding their patterns of spending, you should be able to tell, okay, that's not right, or this is not right. So that's from a customer perspective.
Yeah.
Now, again, I mentioned about smart this screening data, right? So it's not just, I mean, every time we talk about screening in customer screening, when it comes to KYC, the always what I've heard from my customers also was like, oh yeah, that's just PEP and sanctions, right? And well, you need to check for sanctions, you need to check for political exposure, but there's a lot more. Like, do you care about your reputation? Do you want to be associated with a wildlife trafficker? You want to be associated to a human trafficker? What's your company's organization's risk appetite, right? Like, so you want to understand what adverse information is associated with that kind of screening with that customer. So that's the kind of stuff, and there's a lot more, right? I mean, you can go to various lengths to say, okay, I am onboarding let's say a company, for example, and or an entity. I want to know who are the beneficial owners of that company, and you want to unwrap that, and you have technology for that too, right? So you could look at how we unwrap the customers, the directors of that company, for example, going into company's house, you could unwrap all of that information. And then let's say you're a trader and you're trading with a a financial instrument like debt or equity or something, and then you want to know if that is associated with any sort of sanctions risk. So this is all different data sets that you can actually leverage and understand if there is any sort of red flags. But all of this, because there is technologies and APIs and other mechanisms, all of this, even though I'm telling all of this as like, a lot of work to do, but all of this can be done literally like in seconds, right? So at the time of onboarding, based on the data provided by the customer. And so that's a real value. And what other technologies? I mean, there's things like platform solutions. So, for example, a fintech comes into market, and they want to say, okay, how do I get compliant quickly? You can't give them very basic information or a platform that is so tight, it cannot be scaled, it can't be integrated, etc. That's not going to work for them. For them, they want APIs, they want platform solutions. Give me end-to-end things that I can put all my customer data into, and it starts giving me meaningful insights. So that's sort of a solution. So low code platforms that can take me from here to there in a month's time, not years and forever, right? So that's another way of looking at it. And I mean, again, anti-fraud techniques. I know you touched on open banking. I love it because that way you are now able to say that I am sending money to Scott, who has a Lloyd's Bank account with blah blah blah, right? These sort of details, because using open banking, I am able to verify that I'm sending money to the right Scott and not to a fraudster who has kind of assumed your name, right? So that sort of a thing. I mean, so there's a lot more that open banking can bring into this mix of fighting fraud as well. And obviously there are, we also talk about at length about geolocation and IP kind of IP address localization as well. So you want to see like, oh, hold on, this person sends, so Arvind sends money to Scott every month from this IP, and Scott lives in this part of the world, and we know that mapping is already done. All of a sudden, from Arvind's IP, it's going to a completely different account, or from a completely different account, all of a sudden there's a lot of money coming into Arvind's account. There's something wrong. So that is a kind of insights that you can gain with things like geolocation and IP address tracking, right? So it's like, oh, different IP. Oh, wait a second, that IP address is from a sanctioned country. Oh, what's going on with him? Is that some sort of a terrorism financing that's happening? So you know what I mean. So it's a beautiful world. Like if you get into that, you can see the kind of insights you get, and all of these are connected. So again, going back to my point about the single customer universe. So you want to bring all that data together and say, okay, that's the reason why Arvind is doing something wrong, or you know what, I understand that is acceptable behavior because we see there's no red flags that has originated, and it's a genuine transaction because, I don't know, Arvind bought a house in country X and that's the reason he's doing it. So I mean, again, that's the beauty of it. And yeah, again, it's all about not just new kit or new tech, right? It's also about the reducing the cost of compliance also. So it's a bigger culture change as well, right? So it's about telling your leaders, like, it's not about I'm bringing a new kit and now I can do everything really well, but hey, guess what? You need to kind of understand how we are moving away, how we are bringing efficiencies, how we are moving away from the tick box exercise of compliance. We are now embedding regulatory changes. We are adapting to the new technologies and new regulations that's coming out. how are we driving the culture changes, and so making the senior leaders see compliance as more of a revenue generator, because hey, the better journey, as I said, the first impression matters. So better that journey is, the more customers pour in. So look at it from a revenue generating angle rather than a cost center type. Oh my god, compliance, forget it, that takes forever. You know what, don't invest in that because we have business to do. But guess what, you're going to be hemorrhaging customers if you don't get your KYC right.
Yeah, that's really it. So I just want to dive in there quickly.
Absolutely.
So one point you mentioned there, by the way, if anybody does want to send me money, then I'm very happy to give you my banking details, including yourself, Aravind.
Yeah, absolutely.
But you mentioned there, and it's interesting, a few points you made. One of them was about sort of traditional banks and high street banks. Like, for instance, yesterday I received a check in the post. And I'm thinking, what do I do with this? I've got to find a branch that's open now for my bank and physically go in there. I can't remember the last time I physically went into it, went into a branch. And obviously there's a lot more, there's a lot of banks out there now, a lot of digital banks. From a consumer perspective, that's a good thing, because more choice means that they can choose, the banking that best suits their needs and their situation and everything else. But surely, inevitably, that extra competition, especially with digital banks, there must come a payoff there where the shortcuts are being taken, maybe when it comes around to KYC. And I think what you're saying is that they shouldn't think of it as shortcuts. They should make that compliance as strict as possible, because that is the long-term view, right? Because it only takes one breach or one serious problem with compliance, and then, like you say, all those customers that were so quick to come to that bank are going to leave just as quickly.
Yeah, no, absolutely. I mean, I think in 2020 alone, and in fact, in the US alone, I think FinCEN, which is the enforcement network there, they handed over fines for about 200 billion or so the US dollars just in last year. So, I mean, honestly, they are looking for loopholes, because there's enough information out there about what you should do right. And if you still miss it, hey, you know what? You have to pay the price. I mean, that's the bottom line. And again, good, you mentioned about the strictness, right? And again, I go back to that point about that's where you need to get that happy medium, right? You need to be strict, but at the same time, understand how can you do it better. And it could even be as simple as a message on your phone app saying, hey, welcome to Bank X, and you know what, your information is being verified. You can create your avatar or do something whilst we complete your KYC. I mean, it could be that, instead of saying, okay, you know what, sorry, we can't wait for 15 days before I verify who you are. I mean, that's never going to work, right? So yeah, that's where it's about that building that experience again, only because you can only do it if you have embedded that journey into that whole embedded compliance into that whole journey, right? Otherwise, it's never going to happen. So yeah,
absolutely.
That's the story. And again, in our report, again, it highlights a lot about automation, digitization, APIs, and everything. So for us at Refinitiv, we obviously help a lot of payment providers, neobanks, and digital banks around the world to achieve this using screening data, or due diligence reports, and digital ID checks and onboarding solutions, where again, balancing between the enhanced customer experience and also be compliant, and that's the kind of thing that someone like a fintech is really looking for. So
yeah. Absolutely. Okay, look, we've been talking for some time already, actually. So I just want to move on a little bit here.
Sure.
Now we've outlined the rapid acceleration of digital transformation within banking and fintechs. So things have moved very, very quickly, but what's the future looking like? I mean, that's something that we need to consider, obviously. So what's your view on the future of fraud, and do we envisage almost like a convergence of fraud and financial crime?
Yeah, Yeah, no, very, very good question as well. I think financial crime alone equates to about 2 to 5% of a global GDP. I mean, that's
That's
a
crazy.
that's
Yeah.
huge. And the sad part is only about 1% is actually recovered. So you can imagine, like, you think we are way ahead in this fight? No way, right? We are still getting our getting grips with these things, because these numbers are like not even old. This is about a year old. This is the kind of scale that we operate in. So it's not just when you say financial crime, it's not just money laundering, right? So there is
Yeah.
fraud, there is theft, there's corruption, there's counterfeiting, and all those kind of predicate offenses that leads to these some sort of a financial gain. So my thing that I see a lot is like, if we or our customers work in silos, it's never gonna work, because if the fraud department don't talk to the money laundering department, or vice versa, there's a bigger problem, right? So that's why most of the big banks and many companies out there now starting this financial crime division, which kind of encompasses that whole holistic view of what financial crime is all about, and then all of these different fraud and bribery and corruption and money laundering and everything just kind of come into that umbrella. So that's why this is more important than ever, that it's all about network analytics, understanding the transactions of an individual and seeing why they did what they did, and see if there's a kind of history. For example, a customer sends a payment through. You must obviously do payment screening to see if they are sending it to the right people, right country, right bank. If there's any sort of red flag, if that bank is in a country that is sanctioned, for example, you need to be alerted. But hey, guess what? That payment is clean. Recipient account is fine, no issues. But if there was a way to understand the legitimacy of the account by using like open banking and things like that, and then the network analytics from this account highlighted that that recipient account is a fraudulent account. So if the payment is sent through and the screening was fine, they basically would probably go let that payment through. But if the fraud department had actually flagged this as a fraudulent account, and if that communication had come to this team that is processing payments at the right time, they could have blocked the payment and made it happen, right? So they could take an action. So that way you could have stopped fraud. But if these two departments don't talk to each other, then we have a problem, right? So that's one major thing that you want to kind of see, that analytics and the again going back to the customer universe, single view, right? So and then again, the future is can be sometimes a bit, because is it difficult to say, because there's always challenges, because tech is evolving at a massive rate. So we have decentralized finance, we have cryptos, we have even Facebooks and the rest of the world coming up with metaverse and many more. So there's a lot of innovations happening in this space. So think about, just now when we got to getting grips with the physical movement of money, here comes virtual currencies, and you're like, oh my god, we need to go back and start again and figure out what we need to do best. You need to now not only screen the IPs, but you need to look at wallet addresses, and you need to look at other geolocation and see if there's any sort of wrongdoing. And so it's a constant fight, and I can see that very much. But what we are trying to do is, with technology, we are kind of making it easy. So there are definitely APIs that is taking the front row with when it comes to screening, adverse media, digital ID, and the likes, right? And enhanced due diligence and everything. So, and obviously all those technologies are pretty much in the front row. And also there is robotic process automations, or RPAs, and other cloud technologies are also in the forefront. Now, when it comes to machine learning, yeah, I mean, how can it help? It can help a lot because, but again, I believe it's more about supervised learning. So for those who want to know more about machine learning, please do read about it. It's supervised learning. Obviously, you want to train the models constantly. I don't think we are at a stage, especially when it comes to KYC and compliance, that we are at a stage where we can let the model run itself, because regulations are constantly changing. This FATF just released a document about crypto and AML just last week. So, and it mentions a lot more things that needs to be incorporated when you're doing KYC for a virtual currency like a crypto or anything. So these things are constantly changing. You need to supervise the learning of that machine learning models and understand and tweak and monitor as all the time. So a definition can obviously change. Regulations keep changing, right? So that's machine learning aspect about this whole thing. And then obviously there is data sharing. So I mentioned data sharing. So always the constant struggle was like GDPR versus AML. So GDPR says, hey, my data is my data, but AML and financial crime world says, yeah, but I'd love to know if the person in Netherlands is the same person that they considered as a money launderer. Has he or she opened an account in the UK? I mean, how would we know? If these two banks don't talk to each other, you're never going to know. They could easily just slip out of the system, go into a different country and start an account again. So how would you actually know that this is the same person? So GDPR says, oh, but I know he is a bad guy, but I'm not allowed to share the information. Or so where is that kind of medium again? What is the balancing act there? And that's when things like blockchain and privacy enhancing technologies like pets, again, still a long way away, but what they do is like, you could take this information, anonymize some personal identifiable information and pass it along to other countries through a common channel or a blockchain or a smart contract and make it better. So this bank will know, oh yeah, it's one and the same person. So that is also in the horizon, and I can see that very much helping with the data sharing. Another one is about obviously adoption of this digital ID and customer onboarding tools, because excuse me. As far as digital ID is concerned, I think people are still skeptical about like, oh, I don't want to take a picture with my phone, or the companies are like, yeah, but I don't know if that really does anything. So there's a lot more education required, not only on the customer side, but also on the fintechs and the rest of the financial services businesses, because they are all very skeptical about whether we can use digital ID to truly give that benefit. And it does, right? So there's a large scale adoption that is out there that should be happening. And obviously there is a lot more that can be done with network analytics and transaction analytics, as I said. So one of the things I read recently was about, it is not the fittest or fastest or the most intelligent that will survive, but the most adaptable, which I really like that quote. And I mean, to be honest, right? No one guessed in their nearest lifetime, like, that I would ever have a hand washing timer on my Apple Watch. I mean, can you imagine like Apple Watch developer or the product director sitting in a room and thinking in 2019, oh yeah, we should have a hand washing timer? No, never, because it all came after COVID happened, right? I mean, that's the best part. So it's always about not the fittest and the fastest, but it's always the most adaptable that will survive. And now is the time. It's digital, and that's now. So the innovation is, industry is innovating at a rapid pace. So there's definitely there's a value that we could achieve out of bringing technologies into the mix. Now, obviously, there's a macro environment that plays in the whole thing. Now, Economist I read recently had something about very interesting about AML, right? So you do all of this, but then there's a lot that government and law enforcement should do, which is about, there's a lot of lack of transparency. So you don't know what your ultimate beneficial owners are. So because there are no public registries, so if a Companies House has done a wonderful job, but not every other jurisdiction around the world is doing the same. So you would not be able to find out the whereabouts of a company in other databases, like how we do with Companies House, for example. So that is a lack of transparency, lack of collaboration. As I said, there's a balancing act between AML and GDPR. So that is, again, something that needs to get to a legislative priority in a way. And the last one is the lack of resources. So there's a lot of these reports filed about fraud, but how many are being actioned and how many customers get the money back for the money they lost, right? So these are the kind of macro aspects that there's so much we can influence, but there's a lot of lobbying happening anyway in every country by these top banks and execs to make that change. Now, I would definitely finish off by saying, I mean, companies that do not use these smart technologies and are unwittingly choosing to operate in ignorance, right? So not only they are like less and less likely to detect financial crime, but they are also less concerned about the potential consequences. So it's very vital, in my view, that the industry should come together and increase the engagement around this, share learning, share information, and also encourage the importance of investment in the right technology and data. So for me, that's where the future stands.
Okay, all right. Well, that sounds like the perfect place to end it there. And just looking at the clock, I see that's actually all we've got time for as well. So all that remains for me to say is a big thank you to Aravind for sharing his insights today, and to you all for joining us as well. So thank you, Aravind.
Thank you very much, Scott.
Now, I must say this webinar is available to watch on demand as well. So if you maybe missed the start, or if you enjoyed the content or want to review something that Aravind touched on there, or if you know someone who would benefit from watching this as well, then please do share the link to the webinar. You can also find out more about Refinitiv by visiting refinitiv.com. And of course, you can catch up on all the latest news and trends in fintech by following fintechmagazine.com as well. So goodbye for now.